Thank you for tuning in on this China Café podcast. My name is Monique Knapen. I am the chair of the Association Netherlands-China. I hope you will enjoy our VNC China Café podcast. If you're interested in our other VNC activities, please visit our website of the VNC, vnc-china.nl. And if you want to receive our updates regularly, our newsletters and our magazine, then you can also consider become a member. Then you will always be updated. Thank you.
Welcome at the China Café. The China Café exists already since 2007. So next year we're going to celebrate 20 years. So welcome everybody and have a very happy new year. The year of the horse has started, the fire horse. And as it goes, it's supposed to bring us energy and strength. So I wish you that for the coming year. Tonight we're going to talk about a topic which is very relevant, especially in these days, these turbulent days, I would say, investing in China. In the late years, the Chinese stock market has been very volatile and not so trustworthy, and the revenues were not so promising. But on the other hand, there's a new tendency that there's a new momentum coming from fields like technology, green energy. The domestic consumption is on the rise, so there's also many chances on the Chinese stock market. And especially now where global forces are evolving all the time and where economic power balances are changing, it's important, I think, to see what's happening in China in the field of investment. Is investing in China a growth opportunity or is it a risk? There's always that's what we're gonna see, how this balance is evolving. And we're gonna talk about this together with our expert market analyst Jean-Paul Van Oudheusden. Jean-Paul, he graduated in 1996 as an econometrician at the Erasmus University. You've worked for several banks, and you've told me that you were surprised that these banks were always focusing on Shell and ING and never put any interest in countries like China. Which is motivation to start your company. Markets are everywhere, and in this company you try to follow the trends and all the aspects in three transitions: digital, energy, and mobility. And these three fields are, of course, very related to China because those are also their focus points in the Chinese policies. So in that way, you are automatically following China as well. I'm really happy that you want to share your insights with us on investing in China. He's all over the place, meaning that he is performing on many channels. You publish many videos, podcasts. You are on lots of media as well. So we're very honored, actually, that you also took the time to be here present at our China Café.
Yeah, thanks. Thanks for the invite.
Good. Very good. Did I introduce you properly enough, or you want to add some?
Yeah, definitely. Perhaps to elaborate a little bit. So I've my general profession, if you wish, is investing and helping people to invest. And when I started my own company, indeed, as you say, markets are everywhere in 2020. The obvious topic to look at was China, because there are so few people who really know what's going on. That's my fascination with other markets, that people have an opinion and they talk about it, but they don't analyze what's going on. So I hope to contribute in a very broad way, not only on China, but also on other topics. Because the general purpose is that more people start investing. If you have savings monies these days, and you take inflation out and the taxes, well, there's a lot of hassle about it lately, then that leaves you with one option, is to invest. and, take the entire world and look for opportunities.
Yeah, and also listen to experts who can guide you in that complex market. Right. Today we're talking about investing in China. Well, we've all seen that the Chinese economy is doing not so well if you compare it to the decennia before us. We've seen growth rates over 10%, 12%, 20% even in the East Coast. That's not the case anymore. We're barely touching 5%. So there's a slowdown, and do you see this slowdown as a structural slowdown because it's also a maturing economy, or is it just a hiccup or a temporary setback?
No, we were talking about it already just now. 5% is on a global scale still a very decent growth rate. However, a lot from the growth in the past came from the real estate sector. And that's I don't see that going back to where it was. So that was really the engine for the higher growth, and it could be replaced with something else, but that is not visible yet on the scale that the real estate sector contributed to the economy.
Yeah, so infrastructure was quite a easy way to generate growth, and we are now heading towards a middle income trap, as they call it. So it's not that easy to pick the lower fruit anymore. You need other industries. But you don't see with this tech growth and the ambition that China has that it will indeed become a more sustainable economy.
Definitely. Again? China has many good things, and they're developing more rapidly than many other countries. So that's very promising. It's only the scale of the real estate business. I often hear the saying that, more houses have been built that are Chinese people. That is difficult to see how you can replicate that. And that means that you have to go abroad. You need to export more of these high quality products. Yeah, and that's where you come into another type of competition that you have domestically.
Yeah, they're not so experienced in that field as yet.
No.
So it's more a structural slowdown than a temporary dip, you think, or is it just unpredictable?
No, the downfall of the real estate business is structural.
It's structural.
Because I can't see that at some point the crisis will be over. Perhaps it's bottoming out here and there already, but to see it go back to the pace of growth that we've seen before, that's difficult to imagine from my perspective, at least. If someone believes it's different, then I'm happy to hear.
Yeah. So you need different drivers.
Exactly.
Now for the economy. Now thinking about investment and global investment, would you think that China is indispensable in the field of investing? If you are an investor, you need to include China?
Yeah, from time to time, there have been moments in history that you thought, that's really indispensable because so many people, a large economy, high growth. But you can't say that right now because the last couple of years that we've seen, you could, as an investor, make very good returns without China. On the other hand, it's still the case that China is way too large to ignore. It's everywhere in every sector. So you have to take a look at it, and it's still very much possible to make very good returns, as we've seen last year, for example.
So indispensable is maybe a big word. But
that's too big a word.
But you need to have a close look at it and follow it.
I think, around the globe there's so many people, you need to have some sort of an edge. If you follow the news from China better than you do it here, for example, then it's very logical that you look at a market like that. Yeah. But from a perspective from a Dutch investor, it's not the obvious first choice because there's so much unknowns and you need to find the time to study that.
No, but from a macro perspective, you would say
definitely,
it needs
because
to be included.
It's always about diversification, and China definitely offers a different type of return and risk compared to the other markets.
And we'll come to that as well. Yeah. All right, we're still sketching the big picture here. Big picture also includes geopolitics. Would you say that the impact of geopolitics is really determining the investment climate?
Yeah, definitely. From a China perspective, you have another big country around that talks bad about you every moment they get an opportunity to do so. Yeah, so that's difficult, and that's obviously hindering to attract, for example, foreign money into your country. So that's an ongoing debate. Although a lot of people see the high quality products that are coming from China, but in a different setting, the export potentially could have been much bigger than what we've seen lately.
Yeah, and also the trade war and the tariffs are not helpful.
Exactly. No, that's not helping.
No.
That's not helping.
I don't need to state that even, I think. But also issues like Taiwan, how do you think that will have impact on investments?
Yeah, I leave it with investing. I'm not a politician. We know what we see from Taiwan, but I don't have a firm opinion or so on that. I don't think that's blocking typically investments. It's more a political issue than anything else, I'd say.
Like everything that's happening in the world right now is just not directly connected to investments.
No, what can I say about it? Taiwan is obviously home to TSMC, which is necessary for any chip product that is out there. But with the US, together with TSMC, building their own setup in Arizona, it seems to get easier to come to some sort of a solution there.
Yeah.
Otherwise, you cannot split it. But now it seems one way or the other, if you look at it, that they're splitting the company at some point.
Yeah. I think you're following also the connection US-China from the point of view that Trump will go to China at the end of March.
Well, after this weekend, that's questionable whether he will still go.
Okay,
but,
he's very busy at the moment. But do you think he has enough cards to persuade the Chinese to slow down the trade wars or vice versa?
Well, I think, how do you say it? They are tough competitors, but on the other hand, they also, although it may not seem like, but they respect each other, and both are looking at the economic side of everything they do. So and that's obviously also perhaps a bit what you want as an investor. If there is a trade deal that is working, that's good for the economy, not only of these two countries, but probably for the global economy. So that's what you hope for. And I think ultimately it could be. On the other hand, what we've seen before during Trump's first presidency, there was an agreement, but it wasn't lived up to. Yeah, so it's very difficult to see. So for me, the focus is more, do they keep on trading with each other and not look so much, the headlines and an agreement is more for the press photo or whatever. Yeah, but as long as trading goes on, and we've seen that, for example, last year when apparently, I don't know any of the details, I don't think any of you do, but there was apparently in the negotiations, there were some troubles. And then China started to restrict the export of certain commodities. Mm-hmm. And that really hurt a lot of companies. And then the US was willing to give in. I don't know what they got in return or whatever. Yeah. And also with the soybeans, for example. Yep. That's those kind of moments. For now, it has every time come to some sort of an agreement where we don't know exactly what, but that is a positive for markets in general.
But for you as an analyst, you don't look at the headlines and the stories in the newspapers, but you really look at the figures and
the numbers ultimately is what counts.
Yeah, and that gives you an indication of the continuity of the flows.
Trade volumes,
Yeah, good. We have to talk about risks also, I think, and realistic opportunities. Let's first start with risks. What do you think are the biggest risks for foreign investors in China?
Yeah, I think there's obviously many that are linked to investments. But if two things that you can single out specifically is one is the government interventions from time to time. As an investor, when you think you're following a good trend, then suddenly there's an intervention. You say, what's going on? And you don't even get the details. So as an investor, it's not per se a bad thing to get bad news, but uncertainty. That's what investors don't like, that you don't know what you're up to.
So the IPO of Ant Group or
that was called off, then it's fine. But after that, it was still not clear what would happen to Alibaba. That's the...
It's like the spin-offs of that.
Exactly. And the other thing is, and again from an investor perspective, is the overcapacity that is present in so many sectors and already so early in the development process. And you mentioned in your introduction mobility. From all the sectors, I spend a lot of time looking at the car industry because it's a very simple topic and you can explain it to everyone because it's a product that everyone understands. But if you see how many car companies are still there and how few make any money, then that's something in the West that is for us difficult to understand why that is not done in a different way.
Yeah, because they thrive on export. That's their economic model, let's say. And if that is not successful, then the economy will slow down. And you get
but particularly also from an investor perspective, if you look at BYD, I think everyone obviously here knows BYD. But if you look at it from the stock perspective, it went up at the time when Tesla broke through and came up with the electric vehicles. And people say, hey, that's also another company that makes electric vehicles. But if you look at the BYD stock price on average since 2022, it's a flat line. And this is typically one of these topics because people read the headlines. BYD is selling more cars, selling the most cars. It's past beyond Tesla. But as an investor, it doesn't bring you much.
It's not so profitable.
And then probably we don't even know the worst, what's behind the numbers that are correctly published. Yeah. But it's difficult to become enthusiastic about something like that.
So two risks, you say. One is the overcapacity in export volumes, maybe, or in general, and
in the production and the manufacturing.
Yeah. And the other is the again to wrap up.
The government interventions.
Government interventions. Yes, that's totally unpredictable, and that's dangerous for a foreign investor. Yeah. About the export model, we will host a new China Café in June, especially about this theme, how China can change their economic model into a domestic consumer model. Will that happen? So we have invited Helene Mees to talk about that. Sorry, do some promotion for our next edition. We talked about government intervention. How can you assess that risk? How can you give value to that risk?
That's two different questions, but how you can assess it, for me, the only option is to talk to people who are close to what's going on. You can follow the news, but you don't really get it. So you need to have, it's not inside information, but people who work in the industry. And for me, for example, I don't travel to China that often, but I have on a daily basis, I have connection to some people in Shenzhen who work in the various industries, and that's very valuable. And that doesn't mean that you get the information in time, but you see, they can read Weibo and, the other channels that they do automatically.
See the smoke. So they must be fast.
How do you value it? It's impossible to value. I was giving just before this the example of Tencent. That's when you look at big companies, it's a familiar name. I think it's a well-run company, but at some point they didn't get a license anymore to issue new games. Well, that's their core business. And then the question is, for how long is that? Nobody knows. That you cannot value when that's coming back. You can only guess, and that's never that good when you try to do valuations.
Yeah, and it's a negative impact.
Well, if you can't sell your blockbuster product, then it's difficult to see how you're going to make profit. No.
But we've also seen that in my business. Training institutes, they were not allowed to offer trainings anymore as an extra, and it was also overnight decided. So it's
it was overnight that they didn't want public companies to offer education, and then that was a tough call.
But if you have feet on the ground and you have people really in touch with the Chinese media and obviously also the Chinese governmental bodies, you would say you have more intelligence to have some sense.
Yeah. Particularly the business people who work in the industry, and they usually have a good sense of what kind of discussions are going on in the back. At least that helps me.
Yeah, but you're an analyst and it's your job. But as a foreign investor, just an average Dutchman, they don't have that kind of connections, so they just follow you or listen to you.
That's too much. That's too much honor. But
yeah.
the good thing is that there are so many sources on the internet these days where you can really follow in-depth discussions, also on China. That's very helpful. So any topic, you can find someone with a YouTube channel providing videos.
So it's available.
Yeah.
Good. Besides the government intervention and the overcapacity, I think another risk is also that the companies themselves are not so transparent. So you don't know really what's going on in a company. And I always hear from my husband, who is a very enthusiastic investor, you need to know what a company is doing when you want to invest in a company. How do you do that?
Yeah, well, this is a nice one. You can turn that around as well, because there are so many Western companies where we also don't know what's going on. I heard you had a session on Nexperia. Did we know what was going on? So that's typical everywhere. But I see your point. The only thing from my perspective is focus on the larger companies. Also, for example, when they have a listing abroad, then you still may not know what's going on. But when there is some pressure on disclosures, that you get an idea of what's going on, or there are other analysts looking into what are the themes here.
Yeah.
That's helpful. Otherwise, it's really a black box. Yeah, then it's gambling. Then it's not investing.
That's never sensible. No, but we've heard that that the bookkeeping and the accountant standards are totally different from ours. How can you assess the figures that the businesses are publishing?
Yeah, I can't. So that's something that you. That's why many Chinese stocks are trading at some sort of a discount. If the business is good, you can imagine, and. There is obviously a lot of information, but you cannot look at, let's say, hidden loans or whatever, and that is a risk. So what I'm doing more is also looking at the public profile of management. Do they appear? Are they open? What they talk about? And there's obviously quite a difference between companies that are really set up, let's say, as a private company, and, for example, state-owned companies. As a Western investor, to invest in China's state-owned companies is very difficult.
Yeah, that's even bigger black box.
Yeah.
Maybe. Yeah. All right, that's enough for risks, because there's also some opportunities, I think. Let's first see, China has many stocks listed, which are always lowly valued. The value of the stocks is lower indicated than the in the US markets, let's say. What do you think that the stock still make them attractive?
No, it's funny. It's by the way, it's very common for, let's say, emerging markets in general that they trade at a lower value because of the political risk in general. That's not typically for China, but it is for all emerging markets.
So a discount on stocks, because they are emerging.
Because governments have to come into regulation in developing these markets. You see that from Latin America to Southeast Asia to, even in Eastern Europe, you see that as well. So that's not a particular China thing. It's funny, in preparation for this evening, where are opportunities? It's striking if you look, for example, at the Hang Seng Index, the leading index on the stock exchange of Hong Kong, and you look at 2025, then it's interesting to see that the stocks that did well are in the sectors that also did well in the US or in Europe. Yeah. And so in that sense, the correlation is much higher than you would expect. Yeah, it's, for example, mining companies have done well because there's such a focus on commodities.
Yeah.
And then you come to names like, don't mind my pronunciation, but Ziyin Company and Hong Chao, or, those are companies that really delivered, I think, 100% plus returns last year. It's banks, HSBC. European banks have done well, US banks have done well, HSBC has done well, China Life, insurance companies. It's funny to see that also a couple of pharmaceutical companies have done well. So there's a lot of opportunities to be had in Chinese stocks.
So Chinese also follow the global trends then in that way.
Yeah. And there are indeed still global trends. A lot is decided domestically, but on the exchange, the bigger companies, they follow also partially a global trend.
Yeah, and that's more safe to follow than on company level. Yeah. And which sectors do you think? You mentioned mining and the service industry or financial industry. Are there other industries that you think are very rewarding?
Well, that's again similar as in the West is technology. Alibaba, Tencent performed on the stock exchange quite well last year and are still looked at many investors because everything ultimately in AI and those kind of things is about cloud computing. And together with Baidu, and Huawei, but that's not listed, so it's difficult to invest in. Obviously, they form a very good backbone for everything that was going on. Even despite the sanction list that the US, a company like SMIC, who produce the chip producer. These are all very... The difficulty for Dutch investors often is that you cannot buy them everywhere. So you need to look at a bank or a broker who's willing to accommodate that you buy these kind of stocks. Oh, yeah. But technology is as interesting in China because they're so good at it. And again, I was looking at lately a lot at robotics. Mm-hmm. But there you see the overcapacity. Even before we have seen a very good... scalable model of a robot, there are already, 100, 400 companies making robots. Yeah, it's the same. So that's more difficult to look through who is going to be a winner in the space. Yeah.
So also tech and the green energy, renewable energy maybe, is that a sector you would do?
That's what I remind from the Beleggers Fair presentation when I was there at your invitation 2 years ago. Particularly if you look at Europe, where people do want to use much more green energy. If you look back at what Europe has done for 5 years, they didn't progress. And it would have been so logical to team up with China because they show how they can do it. But apparently there's not enough trust, or I don't know where that perhaps someone here knows why that's not happening. But that would have been a good match. But it's with a lack of trust in an industry as energy that is so important. Then I think at some point even people suggested that there was spyware in these large cables that you need to then it's not going to work.
Yeah,
it's
if
not
you
going to work.
Start from distrust, you never get there.
No.
I saw in one of your videos also that China is so clever in connecting all kinds of sectors together, so that the energy sector is boosted also by AI. In a sense, and that is a special asset I think that China has to offer. Can you give an example from that?
Yeah, in many ways, but I think, and that is also something that came up just before we started, from universities in China are operating often at a very high level in terms of innovation, and you hear that also from Europeans who decided to work there, that they are so surprised that they when they have a good idea, they get the money, they get the support, and then they can produce. And, they're quite smart in combining sectors. It's also a necessity. And an example would be how China makes use of the vast amount of land that they have to put something also at remote places where you don't really have the risk if something doesn't work well with a nuclear reactor or so, that you don't have to occupy an entire city. Those are smart things, and moreover, they are also very replicable. Well, perhaps not to the densely populated the Netherlands, but to many other countries it is. Think Africa, for example, or yeah.
And for the tech industry, we have had very severe regulations in the past for the Chinese tech industry, but that has been waived for the bigger part. Do you feel that the tech is the new way, the new branch to go, the new industry to go for investment?
Well, I'm of the part of investors who believes that AI is not a bubble, and it's perhaps still early days, but with technology you can improve a lot of things. Ultimately, also if you look, for example, at the industry, well, stick to the car industry, for example. If you see these factories, both in China but also at Tesla, where you have something like 98% of the ongoing work is done by all kind of robots or robot arms. Yeah, that's going to lower your production costs. So that those kind of developments are very promising, and that is perhaps the easier industry. But it's also at some point coming with digital twins to more complex industries, and I think yes, indeed, that's very promising.
Twins?
Digital twins is that you have two. It's one factory, but you have the physical factory, and you have the online one, where you can steer many processes in the factory from behind your computer. So,
yeah, thank you. So there are opportunities, like you said, in tech.
Yeah, definitely.
But how would you do these investments? Like you have A shares and H shares, and you have companies listed in Chinese companies listed in the States. So what kind of shares or Chinese ADRs I've heard? What kind of shares would you go?
Yeah, in general, I would always go for the places where there is the most liquidity. So I think after the tensions around these American depository receipts and the US threatening to delist them, I think every self-respecting company also has a listing in Hong Kong. So I think Hong Kong is a very good starting place, because it's still a very well-run exchange with still good regulation, etc. Yeah, and A shares is for the people who know how it works over there, but that's more difficult for foreigner.
Yeah.
So my starting point would be Hong Kong, and I would leave the ADRs for what they are.
Yeah. So A shares.
I don't think the climate is good enough that that will come together. That the US well, it came from the past that China was looking for funding, and American investors are easy to jump on the bandwagon of a trend. So that's where they got a lot of foreign investments via the US exchanges. But I don't see that returning anytime soon in the current geopolitical climate.
The complex situation we're in. Okay, then you choose H shares. And what kind of product would you then advise? Would you do like active investing, or would you go for ETFs, or what's your...
Well, that's very personal. Like it is, let's say, here in the Netherlands as well. I think it's more a matter of your own preference, what you're good at, and particularly how much time you have. An ETF or an index tracker in one shape or form is for the people who say, I want to participate, but I don't necessarily need to win. I want to have exposure. Yeah, that's easy. You do it with one tracker and always look at what's in it.
And it's balanced out.
Yeah. Sometimes not. But it's and don't go for particular themes, but for a broader. Yeah, exactly. But single stocks is obviously, I think it's more hard work, but it's nicer because you get more the stories around it. And you can really look at management teams where you see where people make a difference. But it consumes a lot of time, particularly not only to select them, but when you have them to follow them all.
And their competitors, I think.
Exactly.
Yeah.
Exactly.
So it's a lot of work indeed. can you advise on, like, let's say, the maximum allocation of China in a portfolio?
Well, I'm not an advisor, and again, this depends. When you're Chinese and China is your core market, then you invest more in China than. But so to answer your question from a Dutch perspective, I think right now, so what I said before, it's difficult to ignore China. So I would also always allocate it in a broadly diversified portfolio, perhaps due to the risks that we talked about. You come to something like 5 or 10%. You can do more, but then you increase the risk and you need to know what you're doing. And it's been higher in the past, but now it's something to...
in one of your videos you said that there was a person, I forgot the name, he invested 87% of his portfolio in China, but he was that was for speculation only, or that's very short term.
That's a different breed.
That's something else than investing maybe.
Yeah.
But if you would go for the midterm or the long term, do you think China is interesting for the long term? Being it so unpredictable, and also the geopolitical situation not being stable.
Well, the China is interesting and has a lot of very good things, but the thing what you're looking for is and perhaps I oversimplify things, but if China and obviously they do want to maintain that growth and they want to have more welfare for all the Chinese people around there, then they need to become better in export. That's where the products, the manufacturing is top of the bill. They're very good products that a lot of people want, but they need to work together with large export countries, and one way or the other, that's not happening. So again, the car industry as an example, in the US you have 100% tariffs. Well, that's difficult, but there's many European countries are open to Chinese cars, but the whole political discussion still needs to take place. So that becomes interesting. Well, now the car sector is in that sense not a good example because there's so much overcapacity and you first need a number of companies to disappear. But they need to be able to work together with governments from big countries, and they need to find a way to explain why they are not worse than the US. Because that's often the competitor.
The investment climate, actually, in the sense that they need to be more predictable and more transparent.
Yeah, but that comes after that. If you want to export, then you make sure that is, I think, up to a certain standard, because otherwise you don't get the business anyway.
No. Yeah, but that's midterm then, not really long term.
Yeah, I don't know. It's one of these topics that you, from my perspective, you say, well, I don't understand why it's not happening, because there's so much to be had for one side and for the other side. But let's see. Yeah.
Okay, yeah, it's your job, so you're gonna see it. Then from a personal perspective or a personal outlook, do you have a specific positive China case that has taught you the most?
There are so many. Let's keep it very simple, and perhaps in a round of questions we can talk about other companies. But Alibaba has obviously been a very nice example to learn how things work. And there has been periods that it's gone very well. Also because you see the products going abroad, and you can question the quality of the first products that came out there, but the way that the company was developed and also up to a certain level of the Western standards, that was very nice to see, till it didn't anymore.
Yeah. I saw some statistics.
But that was quite open, transparent communication, what was going on and how it all worked.
Yeah.
That was.
But it went from 87% return down to 24.
Yeah, but that's what you're used to anyway in investing.
That's volatile.
It's more that they managed to attract a very large client base for their products.
Yeah. No. And still growing. And a negative case? that has taught you a lot?
Well, that's always my example, but I may have told it now so many times, but my worst investment ever was also, that was in solar panels. That's what we talked about in 2024 as well. Because I was looking on to new energy. You talk about 2009, 2010, 11, and well, it was all very promising. And I was working at ABN AMRO and was doing also a lot into renewables. But at the time, I didn't know that the Chinese were so good in making these solar panels so cheap, and that profit was gone 90%, I think, within a year or so. So that was a wise lesson. Yeah.
Yeah, the dumping.
But I was lucky to already have that experience so long ago. So, you take that with you.
Yeah.
As long as you don't get wiped out, then it's a good experience.
Yeah, you need those experiences.
Yeah, exactly.
And what is your most contrarian view of investing in China? So what people would think wrongly about China?
It's the most contrarian view. It's a difficult one. What do people? Yeah, I think people in general take to not enough time to understand how things are working, processes are working in China, and that's the start point of everything. So there's not a specific example. But
they take it too lightly.
Well, it's funny. I was there the other day. I think probably Pascal Coppens is a very well-known name. He had written a book. He had invited me over at the Rabobank head office on his book presentation, and the title was "Can We Trust China?" And he asked it to the audience, and I find myself to be the only one to say, "Well, I do," but there were people looking angry at me and say, "How can you say that?" But that's a contrarian, then I would say.
Yeah, because you want to have it as a starting point.
Well, it's never my story. I know a lot of entrepreneurs who do very good business with China on a daily basis, and they never have any problem with the quality of the deliveries they get. So,
Yeah, there are many examples for that.
Yeah.
Very good. One last question, which is just hypothetically. If I would give you 1 million euros, what?
And I wouldn't be here.
Okay, that's also an answer. But how would you invest that in China, or maybe not in China? How would you?
You get the boring answer. This question is no, but then you take a wide diversification and you stick on China to let's say 5 to 10%. Yeah, you don't put it at zero, but you can't do more because of the risk.
Yeah.
No.
It's dull, but it's very wise. Very wise. These were my questions. I'd like to close off the China Café because I'm thirsty. That's not the main reason, but we have to stop somewhere. He will be available over drinks. If you have any other questions, you can ask Jean-Paul. You can follow him on Markets Are Everywhere. And I thank you very much for all the knowledge that you shared with us and the new insights that we gained. And I have a nice bottle of wine for you in a nice Chinese dress.
Thank you very much.
Thank you very much.
Thanks for having me. Thanks for your time.
I sincerely hope you enjoyed this VNC China Café podcast. If you are interested in future VNC activities and would like to stay updated about future China cafes, please go to our website vnc-china.nl to become a member or just find out what's going on. Stay tuned for our next podcast.